Hello and welcome to this May 27th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Goldman Sachs. This is a $72.2 billion financial company that provides investment banking, securities, and investment management services to corporations, financial institutions, governments, and high net worth individuals. Goldman Sachs, ticker symbol GS. First thing I want you to note is normally what you see on these charts when we look at individual stocks, you either see a green outline or border around the company that we're looking at, or a red one. The green signifies that we like it on the long side. Red signifies that we like it on the short side. Here we've got blue. So what does blue mean? Well, blue just means we're not really picking sides here. What we want to do is just provide some education on this chart. You probably hear us talk a lot, whether it's on the radio, maybe in the stock charts articles. If you're a member of Invested Central, maybe it's in the market chatter. But we talk a lot about the MACD, which is the moving average convergence divergence. And what the MACD is it's the difference between the 12-day, this is the standard MACD, which is what we follow. It's the difference between the 12-day exponential moving average and the 26-day exponential moving average. And that difference is plotted using this thick black line that you see. When you go below the zero line, it means that your short-term moving average, the 12-day moving average, goes below the 26-day moving average, and when you're above, it means that the 12-day moving average is above your 26-day moving average. So when you're looking at a stock and you're looking at the MACD, the first thing that should go through your mind is that when a stock has a MACD that's above the center line, above zero, above this zero line coming across here, anything above would ordinarily represent that at least the bulls are in control, because the 12-day moving average of the stock price is above the 26-day on an exponential moving average basis. Likewise, if you go below the center line, that's telling you that the bears are in control. Now, one of the things I like about following the MACD is that many times it will give you signals that a trend is about to reverse. We refer to these signals as long-term positive and long-term negative divergences. What we look for is when you see a stock that's been moving up like Goldman Sachs was from July to October of 2009, notice that as it's moving up here, if you get two consecutive highs, and I look for consecutive highs where you don't have a 50-day test in between, it's just one of my personal preferences, but say you go up, you come back down, you test the 20-day, you go back up again. When you get this higher high in place and you see the MACD is not following suit, the MACD is actually going in the other direction, it tells you the difference between the 12-day and the 26-day moving averages is shrinking, even though prices continue moving higher. Normally, when prices are moving higher, these two moving averages will diverge or grow larger. In this case, they are converging or growing smaller, and that's a sign of weakness. It's a sign of slowing momentum. So when I see this, if I'm in a stock on the long side, I'm either getting out or looking for a sign to get out, like a reversing candle of some sort, anything that could possibly change my opinion of that stock in the short term. But take a look at these negative divergences. One in October of 2009, one in April of 2010. Both of these had higher highs, lower MACDs, and you can see the resulting weakness. Back in December of 2010, we actually had a positive divergence, and we saw about a 10% pop to the upside. Currently, it's worth noting that as Goldman Sachs has been continuing to sell off, we have a positive divergence that has been forming on this move. So I actually think one more move to the downside, and that could be it for Goldman Sachs, with a nice move to follow. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.